Thank you for being on this video with me. My name is Rodney Constable. I am the president and founder of Simple Market Signals at simplemarketsignals.com. Simple Market Signals helps you minimize your losses and keep more of your profits through our proprietary market signals that are emailed to you every weekend. Today we are going to be doing technical analysis on the S&P 500 for Wednesday, March 11th, 2020. And for our charting service, we will be using stockcharts.com. I do pay for this service, and I will leave a link to their site in the description box below this video. First off, we were down 4.89% today on the S&P 500, and we closed at 2741.39. And the first thing we're looking at here is a 3-day chart. So here's Monday, Tuesday, and Wednesday, and each candlestick represents 5 minutes of trading in the S&P 500. And the reason I wanted to start off here, and I'll draw a line here in a second, but I wanted you guys to see this. I think it's quite telling on what's going on. But right here, now there's some data missing on Monday. Of course, we had the circuit breakers kick in, but also my charting service had an issue on their data feed on Monday, and it didn't really kick in until, as you can see, about 1:30 in the afternoon. So thankfully, at least we have this data because I needed this to show you guys this today. But you can see here that at this 2735 level, that's over here, all right, look at this. We hit the 2735, just kissed it on Monday afternoon, okay, 2735 on the S&P 500. Guess what the low was yesterday? 2735 on the S&P 500. Look at how 2735 was acting as support here this afternoon, and we danced around that for a little while, and then once it broke, we went down, and remember the levels I've been telling you guys, where we enter a bear market, 2708.94. Look at that. We came down and kissed a bear market in the S&P 500 today, and then we had a little bit of a rally, and we finished up at 2741.39 right here, okay? So it kind of reinforces some of the things that I've been telling you, that right here is that bear market, but we've got algorithms that are set to kick in at certain levels here, guys, and I'm going to go ahead and draw, before we move on to the next chart, I'm going to go ahead and draw a horizontal line just to make it easier to see this. And we'll get that right there as close to that 2735 level as I can. And you can see that, you know, we're just right in there, okay? I mean, it's, so there's 2735.08 to be exact, but it'll make the point for you, okay? So you can see right here, you can see right here, and then you can see right here. And then once that level breaks, okay, then we have a very, very rapid drop. Again, each candlestick is 5 minutes. We have a very rapid drop, and then hit this just a little bit below 2710. And again, based on my calculations, a bear market in the S&P based on the closing price from February 19th, which was 3386.15. You take 20% off of that, you get 2708.94. We came down and literally kissed that area for, 5 to 10 minutes here this afternoon, just after 3 o'clock, about 3:15, and then bounced off of that and then closed above 2735 again. So we're really, really going to have to keep our eye on this 2735 level. And, do I expect it to hold long term? No way. I think the environment is just too dangerous out there, guys. But at least it gives you a really, really short-term line in the sand to watch. So 2735 becomes our most important near-term support level. And maybe we'll get lucky and stay above it for a, let me just name this real quick, 3-day, 5-minute. Upload that. Okay, just want to save that chart. But maybe we'll get lucky and stay above, 2735 here for a day or two. We kind of went down and, sometimes when you see this type of an action, right, where you go down and undercut it and then come back up, and it'll trigger the short-term stops below it. Sometimes this is a very positive action for the near term, all right? Maybe that means that, for a day or so we put in a bottom. But I think the macro environment out there, coronavirus, oil, bond prices, bond yields, and everything that, and the ripple effect of this, okay, as I've been saying for the last few days, the domino effect. We're in a negative feedback loop, guys, and there's no way that I can see that the news gets better anytime soon. The news more than likely will continue to get worse. All right, we're seeing soccer playoff games in Spain being played with no audience, right? Nobody is in the stands, just the players on the field. I mean, it just, I don't have enough time to go into all the little data points, but I think you get the idea here, guys, that it's, and this is where, see, I'm a techno-fundamentalist. I look at the technicals, as we're doing now, but I also look at the fundamentals, all right? I don't really look at economics per se, but I look at fundamentals, and I try to anticipate what is going to happen with earnings of these companies. And right now, with all the negative news out there, and again, we're just scratching the surface potentially of the damage that we could see because of everything hitting at one point. We have a perfect storm here. And so please don't dismiss how dangerous these markets are. Again, in the short term, maybe we're going to get a little bit of a pop here because of the late day market action. But let's take a deeper dive into what happened today, and then we'll look at a longer term chart. So this is a one-day chart where each candlestick represents 1 minute of trading. And as you can see here today, we kept trading lower and lower and lower and lower, and then we put in those lows of the day right around 315, and then slightly undercut at around 320. If you can see here where my cursor is moving in the lower right-hand corner of the video of the chart. And so you can, this again in the short term possibly is positive, because you can see we put in this little double bottom here, okay, even though these are just 1 minute candles, that's the pattern. And then we rallied off of that, and then we were able to get back above this 2735 level, which see, look at how tight that is, all right? I mean, there's no way anybody can tell me that there's no algorithms in there set at 2735. Look at how tight that trading was right there, and then we got back above it, and and we were able to stay other than just this 1 minute of trading here, 1 or 2 minutes, we were able to stay above that level once we popped back up above it, all right? But you can see we literally came down and kissed that bear market territory, and perhaps testing it, if you will, and then bounced off of that. So possibly this sets us up for maybe, and the fact that, again, we're down almost 5% today, and as you guys have been learning over the last few days through my videos, whenever you see these big moves, you oftentimes get an opposite reaction the next day. So yesterday was a big up day. Today was a big down day. So tomorrow possibly could be an up day. Is it the end of this downturn? I don't see any way that it is. But this pattern here, the fact that we bounced off of that, the fact that we got back above 2735, which obviously for the last 3 days anyway has been acting as a short-term level of support. The fact that we were able to get back above it and stay above that for the close, with this little reversal pattern right here during the last half hour of trading, tells me that possibly we could see, again, this same continuation, right? Big up day, big down day, big up day, big down day, like we've had for the last couple of weeks. So if that pattern continues, and if this little reversal pattern tells us anything, tomorrow might be an up day, but there's no way that means that we bottomed, okay? It's just the news is too negative, and there's just too many unknowns. I just don't see any way that that's the bottom, all right? So with that said, now what we're looking at here is let me make sure I've got everything refreshed. We're looking at a 2.5-year chart where each candlestick represents 1 week of trading in the S&P 500. And we can see here that the 2750 level, where I've had this line drawn, and that is the 2750 level, 2745 to 2750 is a very important longer-term support level. And it also, as you can see here, if we go all the way over to the beginning of 2018, where I drew this vertical bar as well so it's easier to see, but at 2750, we have virtually wiped out all of the gains, or anything below 2750, like right now, we're at 2741.38. Right here, we have wiped out all of the gains that we've made in the stock market since the beginning of 2018. So we're basically back to where we ended 2017. All right. So obviously, a lot of portfolio damage, psychological damage. It's discouraging. We just lost 2.25 years. That is not fun. All right. So And as we can see here, we came down and came within a whisker of 2,700. The reason I have that blue line there is just it's easier to remember 2,700 than 2708.94, which anything below 2708.94 is technically a bear market in the S&P 500. My understanding is, and I don't really track the Dow, but I did see on CNBC here, based on the close, that the Dow closed in bear territory today, which means it was down more than 20% from its all-time high back on February 19th. So if the S&P follows suit, which I think is quite likely in the next few days, keeping in mind that Fridays oftentimes are down days, okay, especially in this environment, nobody's going to want to go long into the weekend in this environment. In other words, people that are shorter term traders, they're not going to want to have long equity positions. They're not going to want to own equities going into the weekend with so many unknowns. So Fridays, as we've seen over the last 3 weeks, down days. I would anticipate that same price action this Friday. Again, tomorrow being Thursday, we might get a pop based on some of the things we saw today, as I just pointed out in those short-term charts, and based on this one up, one down pattern that we've been in. But I would anticipate that Friday is more than likely a down day, and we will more than likely undercut this 2,700 area, I would imagine, or at least fall beneath 2,750 again, even if tomorrow's positive, Friday's negative. But if we fall beneath this 2,700 level, that means we're in a bear market. And as you can see, there's just not a lot of support until we get down here to this 2,350 level, which is the level that we hit at the end of 2018. And that, again, is where we started this rally that we have here, okay, we had here, all right? Guys, I see no way around us going down to at least 2,350, and it's starting to look like we could go a lot lower than that. So don't take this market lightly, guys. Don't try to be overly gutsy. Any of you that are shorter term traders, maybe you can make a little bit of money in the up and down volatility, but to a large degree, this is really starting to feel like 2000 through 03 and 2007 through 2009 for me. I was in financial services during those downturns, and this is starting to look and feel a lot like that. Hopefully it won't get that bad, but there's negative news after negative news coming out. So 2,350 at the bare bones minimum is what I am seeing before this is over. So please don't underestimate how dangerous these markets are. And for the ultimate in protection, I would encourage you to subscribe to my weekly newsletter, Simple Market Signals, which is built around my proprietary signals. Guys, it's less than $20 a month, and I'll have more information for you at the end of this video, but it goes way beyond technical analysis, and it looks at the risk levels in the market, so it helps you understand when you can afford to take more risk and when you need to de-risk your portfolio. And I have a risk-based component as well as a trend component in my entire system, which my subscribers receive the data at least once a week, every weekend. But if I need to, I do send special midweek updates when necessary. So do yourself a favor, look further into Simple Market Signals. I will queue up a few videos at the end of this. As a matter of fact, so now we're obviously out on my YouTube channel, the Rodney E. Constable Success Channel, and a couple of videos that I really want to encourage you guys to watch so you can find out more about Simple Market Signals and how it can really, really help you be more profitable, even if you are a really good technician. Guys, I'm telling you, Simple Market Signals, my proprietary model, took me over 20 years to put this together. It works. I have financial advisors that are using this to help run their practice. It flat works, all right? It goes way beyond traditional technical analysis. So to kind of show you some of the things that you need to understand about it, I would encourage you to watch this video here, which is S&P 500 2000 through 03 using Simple Market Signals, and then also go over to, and then of course you can watch the buy and hold, right, and what that means from 99 through 14 and how damaging that was. But also I would encourage you to watch Simple Market Signals from 2007 through 09, right, on the S&P 500, how that would have helped you there. And also another really challenging year of the market where the market was actually negative, 2018. If using Simple Market Signals, you could have easily made a profit, a nice little profit in 2018 when the market was actually down. So at the very least, guys, you owe it to yourself to go out and watch these 3 videos. They're all pretty short. They're all under 5 minutes. And this one's, less than about 4 minutes. This one's 3 minutes. So go watch these videos, invest 20 minutes in yourself. Check those videos out, because I'm telling you, it'll really help you understand the power of simple market signals. And also, if you haven't already done so, please subscribe to my YouTube channel. Thank you so much for being on this video with me. Please give me a thumbs up on this one, and I will see you tomorrow.